We're news for business people.
Hello and welcome to the F&O Show on BloombergQuint Live, India's first digital live streaming business news service. I'm Darshan Mehta.
Good to have you with us, Darshan. I'm Agam Akil, and here are the top headlines of this hour. Indian markets trade in a narrow range. India WIX advances further, and the 10-year government bond yield rises to its highest levels in 16 months after retail inflation spikes in October. And open interest in Pidilite and Dish TV increases as traders take fresh positions in their respective futures. Whereas Airtel is one of the top nifty gainers after the Bharti Group sells as much as 20% stake in its DTH arm to Warburg Pincus for about $350 million.
Okay, let's take a look at what the F&O picture is indicating. At least let's start with the indices. Let's talk about what the Nifty is doing. The Nifty is rather flat in today's trade. If you're looking at what the Nifty is happening, it's down just 5 points. It's trading at a premium of almost 18 points. The open interest build-up is close to almost 2% on the Nifty. Even on the Bank Nifty, it's trading down marginally in trade, just down 60 points, but the premium continues to be close to 50 points. That's added in almost a 4% in open interest. Now, if you're looking at where the WIX is, it's important to pull up, and the WIX yesterday saw a big jump. It's trading rather flat in trade since the market is also rather flat in trade. Now let's see where the open interest build up is. Firstly, in terms of the total open interest, you're seeing that the 10,000 core put has the maximum open interest. It's almost 90 lakh shares, so that seems to be the biggest support that the market has. Even at levels of 10,100 and 10,200, put writers are very active. There seems to be the support that is there, and at higher levels, 10,300 right up to levels of 10,500 is where the resistance seems to be kicking in as far as the market is concerned. As far as today's trade is concerned, let's see where the open interest build-up happened. So it's basically between the 10,200 and the 10,300 mark. Almost 2.5 lakh shares have been added on the 10,200 put. Another 1 lakh shares has been added on the 10,100 put. And on the higher side, you're seeing a little bit of put writing even coming in at levels of 10,300, indicating that the signs at least are slightly on the bullish side. It's flat in trade, but slightly on the bullish side. Almost 2 lakh shares have been added on the 10,300 mark. So that is where positions are being built. PCR pretty much at the same level, 1.27% from the earlier 1.26. So that's the broad sense that we're getting from the index. Agam, what are individual stocks telling us?
Well, we're looking at a gush in Pidilite. That stock has moved up substantially. There's a surge in open interest as well. So let's pull up that list of increase in open interest where in terms of stock futures, and there you see have it. Pidilite's right at the top. It's up around 2%, so we're looking at fresh longs building in there, and it's the same for Titan Company, which is also moving up around 2.4%, so longs building with 14% added in open interest. And Balkrishna Industries, Dish TV and InterGlobe Aviation among the other counters which are looking at a substantial surge. InterGlobe Aviation specifically stands out there. This is after we understand the promoters are looking to sell stake, and well, it's down as much as 2.5%. In terms of unwinding, and let's pull up that list as well, we're not looking at too much. Page Industries is seeing a decline of 2% in OI, even though the stock is moving up by as much as nearly 1%. So some amount of short covering happening. Of course, we did see some weakness in Page Industries over the last couple of sessions, but Cholamandalam, Ashok Leyland, HCC and PFC among some of the other counters where we really aren't looking at too much in terms of changes in open interest, Darshan. All right, so that's the scene, but let's get in our guests, but before we get in our guests, so here's a reminder of all. If you have any queries regarding futures and options market, you can call us now on 022 45404141, or of course write to us on Twitter, Facebook, and with the Ask BQ hashtag, because that is important. That is how we will look for queries on social media. But let's welcome in our F&O experts for the day. We have Hemant Thukral of Aditya Birla Money and Vishvesh Chauhan of Monarch Networth Capital, who joins us on the show now. Hi guys, thanks for joining us. Hemant, I'm going to start off with you. Let me, come on with that basic vanilla question on your direction on the benchmark indices as we move into trade over the next few sessions.
See, good morning. The way I see the Nifty planning out, it's still in a range. See, what has happened is that we managed to rebound from 10,030, very good signal. We managed to touch around 10,400 levels and again receded back. This again shows that at higher levels there is some selling pressure which is creeping in again and again. Yes, there are data points which are helping also selling pressure, but it clearly suggests that at 10,400, 450 there's a lot of resistances and it will not be very easy to clear up. But what is going to happen today or in next 2-3 trading sessions is that because it has come down again in a correction mode towards the first support, that is 10,180 to 10,200 zone, I think one should again attempt a little rebound rally, maybe if not today, maybe by tomorrow. But I think there will be a slight rebound from this zones only. If it breaches 10,180, then I will be seriously worried, because that would mean that that we will have to retest 10,000s. But till now, I think till it holds 10,180, 10,200, chances of getting a rebound back till 10,350 are very high. So I would like to play at this zone for a rebound for next 100 to 150 points in next 2 to 3 trading sessions.
Okay, good morning Vishvesh. What's your view on the Nifty, and if you have a view on the Bank Nifty?
Morning Darshan. See, more or less I feel that you tried to sum it up well in terms of the OI position where they built up and everything. But I think the Nifty has to not locked only in conjunction with the OI, but you have to also pay attention to the very major event which lined up. So Thursday probably will have a second phase done, and by Friday we'll have an impact of an exit poll coming, and on a Monday the result is likely to come. So what is happening that your implied volatility in the last 1 year is right now trading at a percentile level which ranks to about a 94. So that means that 90% of the days in the last year you had the implied volatility which is lower than the current volatility. So right now about a 15.5 weeks which you're seeing. So 90% of the time in the last 1 year the volatility was lower than that. So that means if you are an option trader, then you are paying more premium. But at the same time, if you are an option seller, that means you will get a more premium if you are selling. Now since there is an event and would you like to sell a premium, so my guess is that before event selling premium has always tend to be a more profitable. But if you take a view of an underlying, are you expecting a break of a 10,000 or for that matter the break of a 10,500? In my opinion right now, the way I would like to put it up is that major market participant might be expecting out of that 182 seats around 100, 110 on a conservative side. On a bullish side it could be 120, 130 plus also. So only a sub 100 seats for the BJP would cause some sort of a meltdown for the markets, which in my opinion, if you have to assign a probability, it would be low. So at this stage, if you have to take a benefit of a high volatility, higher option premium, at the same time a theta which you will get, what I would suggest is shorting some sort of a options, and in that sense 10,000 put and 10,500 call combined premium, this triangle is getting you around 100 bucks, 91 bucks, and a 1 day theta is somewhere around 7 rupees. So even if 3 days market doesn't do anything and it remains at the same level, due to the implied volatility higher, you will make a 20 bucks straight away. So this is a neutral strategy which I would think of at the current stage.
Okay, that's it. Let's shift the focus to the options corner. Vishvesh Chauhan has a short strangle strategy on the Nifty. But before we take a look at that strategy, let's see what it means. A short strangle is when one sells an out of the money call and out of the money put in anticipation of decrease in volatility. The strategy becomes profitable when volatility decreases, followed by contraction in option premiums. And that is what I believe Vishvesh was indicating right now in terms of the next 3 days, what could happen happen when the premiums deteriorate. So that's about his strategy, Agam.
Yeah, so Vishvesh, can you take us through that in terms of what calls and puts you're playing in terms of involvement?
Yeah, so globally, I mean, it has now been believed that, for that matter, it's a fact that 70% of the options expire worthless. So option writer is the one who makes money, and option writing at an option is a function of the volatility. So if the volatility higher, you will get a more premium, and that means that you will get a broader ranges. So right now, if you talk about the strangle is the combination of call and put, and right now you're trading at a 250. So if you take a 250 points higher and a 250 point lower, you get a balanced strangle. So 10,000 put, which is quoting somewhere around 55 odd rupees, and 10,500 call, which is quoting around 35-36 rupees. Combined, this premium gives you 90-91 rupees of the credit. So if somebody executes a one lot of this strangle, maximum he can make a 6,700 rupees if Nifty expires anywhere between 10,000 and 10,500. Now, if Nifty moves out of this range, his break even on the higher, or his protection on the higher side is 10,590. And on the lower side it is 99 on a 9900. So my guess is that due to the implied volatility of this strategy, which is somewhere around 15.5, and a one-day theta, so let's say if market doesn't do anything, 7 rupees of its value will anyway decreases as the time progresses. So this strategy looks very prominent, at least if you would like to hold it for a 3 days.
Okay, so short strangle coming in from Vishvesh, but Hemant, coming to you, how would you play the Nifty?
See, I would go with a very simple logic that if I'm expecting that 10,200 should hold, I would play with a call. So I will buy a 10,300 call, which will be hovering around 101, 102 rupees. I would keep a strict stop loss of 75, because if it breaches below 10,180, I don't want to stay in this trade. And I would keep a target of 156, because if it holds, then as I said, I'm expecting a pullback till 10,350. So these levels will be easily achieved. So I would be playing for a pullback, expecting that Nifty should take support around 10,200 to 10,180 zones.
Okay, thanks for that, Hemant. Let's take a look at some of the stocks, the futures that are buzzing in trade today. First of all is Pidilite, open interest build up of almost 18% on the long side. The counter is up almost 2%, so that is in focus. The next one is Titan, again decent open interest build up of 13% on the long side. Balkrishna Industries continues to surge. 2442 is something that I'm seeing on the futures. Again, fresh buying on decent open interest build up of 10%. Dish TV, again the DTH sale of Bharti DTH, that one indicating that the sector remains in focus. And Sun TV has managed to bounce back after a bad day yesterday. Open interest build up of 6% on the long side. The other counters, Page Industries is seeing very low is seeing a decline of 2% or 0.2% on the open interest front, but is seeing short covering that is coming in. Apart from it, I'm very Century Textile, despite good news, it's fallen 3% on the back of just open interest build up of 1%. So these are some of the counters that are buzzing, but rather it looks rather lackluster at this point of time.
Right. Darshan, before we go on to queries, I was wondering if we could take some of these up with our experts. Hemant, if I can come to you on Pidilite, as Darshan was mentioning, we are looking at a 2% increase there, but there is a surge in open interest. Does this mean that this is a start of fresh longs taking place in Pidilite?
See, I think what you discussed with at the start of the show also, it's at a different orbit altogether. Once a stock starts moving on to new chartical territories, making new all-time highs, it becomes only one case that you keep on revising the stop loss and keep on holding long positions. So if you are currently going long in Pidilite or you have gone long, I would now keep a stop loss of 895. I think that's the fresh breakout area. So if you can keep a stop loss of 895, I think this rally has more legs. It can move till at least 930, 935. So I will be looking with a positive outlook on Pidilite. And if you are buying also right now, then also strict stop loss of 895.
Okay, Vishvesh, I want your view on Balkrishna Industries. It's moved up on open interest build up of 10%. The futures are actually trading at a discount to the spot of almost 21 rupees. First of all, any reason why it could trade at a discount? And secondly, what's your view on Balkrishna Industries?
See, I think Darshan, in a very shorter term, you have to understand that the stock is moving on the back of a scarcity premium. That is the way I put it. The stock doesn't have much of the float, and in the future space, it tend to trade in a discount for the simple reason because of the recent position which has been created. So if you see the recent OI built up from the levels of 2000 till the current level, the OI has continuously built up, but the implied volatility has reduced. So what it clearly means that there is some sort of a short position which has been created now. That is a strategic short position also. So somebody who is already long at the lower level and he wants to hedge his position, probably he would be coming and shorting in the future space. So my guess is that in a very shorter term, the stock may have a immediate resistance around 2500, but the way positions is lined up and the OI position indicates that it is not at the all-time high, the open interest, but it indicates that there is still some room for the OI to build up. So last time the highest OI which was built around 1700 odd level, that was around the 6,98,000 for that matter. My guess is that from the current level there is still some room for stock to move higher. So in a very shorter term, if you are a momentum player, then probably what you would do, you would put a 2-day low as a stop loss, which is somewhere around 2360. You want to ride the rally, but nevertheless, the way discount is there, it is the best. I mean, if you use option, apparently it is not an active in the option, but if there is a discount, you could create some sort of synthetic position in the future in option space, but it's not a liquid option space, then probably we would try. So in a very shorter term, I think the discount is probably the way people might be hedging their position.
All right, Vishvesh, but we'll move on to the callers now. And the first caller is Mihika from Mumbai. Hi, Mihika, if you can hear us, thanks for joining us. Tell us what would you like to know from our experts.
Hi, I've bought Motherson Sumi futures at rupees 370. What levels should I watch out for?
Mihika, do you have a horizon or, a target in mind in terms of Motherson Sumi? Are you looking at certain levels?
No, I don't have a target.
All right. Well, Hemant, I'll take this query to you. She's long on Motherson Sumis around 370. The futures currently stands at around 377. No horizon. It could be December. It could be January. What is your view on this particular futures?
No, I would put it this way, that she's bought at a good level because that's a level where it had given a breakout from. Yes, even in the, we are seeing market struggling at these zones also, it's trying to protect that 369, 370 levels. So I would recommend her just to keep a tight stop loss of 365. That will cost her only 5 rupees. But if it doesn't breaches 365, there are a lot of chances that it will retest yesterday's high of 385, 387. That's a zone where I would like to book Mother Sumi once. So just keep a stop loss of 365, hold 387, 386, please book once.
Okay, so that's the view that's coming in from our experts. Time to get in the second query. Priya Subramaniam is calling us from Chennai. Good morning, Priya. What is the query that you have for our experts?
Hi, thank you for taking my call. So I own 200 shares of InterGlobe Aviation and Delivery. I would like to hedge my position using futures or options. So how should I do it?
Okay, Vishvesh, the question is for you. She has 200 shares of Indigo and wants to hedge using F&O. What should she do?
See, apparently her position is 200 share and the future lot size is 600 share, and it happens so that options is not liquid also in the Indigo. So I'm not very sure how hedging would involve more risk for her. So my guess is that at this stage I would not recommend hedging it. Instead of that, simply put a stop loss on the underlying somewhere around 1100. My guess is that the way stock has moved in the last couple of days. Yesterday there was definitely news of it's a offshore entity selling some stake, but my guess is that the stock overall has a potential to move higher till 1260. So as long as 1100 doesn't break, you would like to hold the position and you would expect a higher target. Hedging would involve, in my opinion, more risk and cost, and the same cost can be put in form of a stop loss. So I would rather advise of keeping a stop loss on the underlying of 1100.
Okay, there you have it. That's how you can potentially hedge your position in your delivery using futures. But moving on, let's take some live queries in terms of social media. So the first one comes from Amarchan Jain, and he has the 220 DLF put, which is bought at a premium of 330, and he needs a target and a stop loss. If you can pull up what DLF, that specific put is currently stands around 3.4. So, well, he is making a little bit of a profit right now, so considering his entry price is 3.3. Hemant, what can Amarchand do with his position right now? And if you can suggest a target and a stop loss?
See, for me, I am of a different opinion about DLF. I have been holding long positions, but because he has bought a put and the way market is behaving, and DLF is a high beta stock, I would keep a stop loss for his put at exactly 236, because 236 237 zone. Because if DLF climbs back above 237, then I really see a surge towards 245 246. So for him that is important, and he will start making more money if DLF can slip below 230. Remember, 230 call writers were forced to unwind positions and shift to 240 and 250. So if DLF can break 230, then he can make some serious money, because then it can actually come down till 226 225. So the put can be sold around 7-8 rupees. So I would ask him right now to hold, because it's in an undecisive phase currently, the stock. Keep a stop loss of 237 on spot. If it doesn't breaches 237, if it breaches 230 on the downside, then he has a target of 225 on hands, and he can book put around those levels.
Okay, that's the view that's coming in on DLF. We have one more query that's come in from Twitter, and it is Nitish who's actually put this query. He says that he's bought one lot of Maruti futures at 9150 and a put at 80 rupees. What should he do for his position? So he has two positions, one long future, and he's actually bought in puts also at the 9,000 level. Vishvesh, any strategy that you recommend for Nitish?
See, I think essentially what he has tried to create is a very smart position wherein he is long the underlying, but in order to hedge his position he has bought the put also. Now it happens so that underlying definitely looks bullish, but the volatility at which Maruti is trading, at that volatility buying option would yield some sort of a outgo of the premium. So my guess is that in a very shorter term, Maruti put may not make a lot of money. At the same time, his future position may remain at the same level also. So what he should do is probably he may continue to hold his long position in the underlying, but instead of buying a 9,000 put, what I would suggest is shifting to 9,400 call, and that too also short. So what would happen is that he will get a credit of a 62 rupees. Right now what he has paid is the 100 bucks for the 9,000 put. Instead of that, he will get a 62 rupees of the credit, and that will reduce his risk on the underlying. So if the Maruti falls, that call option of a 9,400 will erode a value, and since it's an implied volatility higher trade, so he would also have a lower value since the volatility would come down. So he'll make money over there, and as long as Maruti doesn't break a 9,000, I don't see a reason why it should rapidly fall. So this is a position which would call a covered call. So from a protective put, I would recommend him to move to a covered call and hold the position.
Okay, Vishvesh, well, with that, we'll move on to trading strategies and trading bets that our experts have for our viewers. So, Hemant, I'm going to come to you. You have a long on GAIL and Tata Chemicals. Can you take us through those?
Basically, Agam, I've selected these stocks on basis of the open interest that is getting accumulated in these stocks. I think gas stocks continue to show me a lot of bullishness, and I think GAIL should lead the rally, and GAIL in intraday also touched 500 in futures. I think the stop loss should be 491 and target should be 510, and this goes for IGL also, because I really see gas stocks continue to outperform. Tata Chemical, again, we have seen a sort of seesaw movement in the stock. Day before yesterday, we saw a good open interest addition of 7%, stock trying to move forward and had crossed 735. Yesterday it gave below, but there was no shorts, there was only long unwinding. Early morning today I have started seeing fresh longs additions again. I think this stock is forming a great base around 720 725, so I would keep a stop loss of 722, and I feel that Tata Chemical should test 750 to 752 target in next 2 to 3 trading sessions.
Okay, many thanks for that, Hemant. Vishvesh, do you have any trading strategies?
I think with a very small risk, I would like to recommend first buying in an Adani port. Right now it is trading at 396, so just a stop loss of a 1%, because I feel that in a yesterday's session the price had moved up and the OI was indicating some sort of a short position, and the way the stock has fallen from a 440 to a 370 odd level, my guess is that stock may offer some sort of a more short covering. So if it doesn't break a 393 392 range, then probably it has a potential to move higher to 420 425. So that is a one very low risk trade I would like to recommend playing in the future. And second is the buy on a Oro Pharma. My guess is that in the entire pharma space, Oro Pharma right now trading at a valuation which is reasonably well. It has come down post his last quarterly result on the back of some sort of unwinding, and probably market participant in large was expecting that result. But right now our research team believes that the level at which trading, it is a very decent valuation compared to its pharma peer. So my guess is that from a trading perspective also 660 happened to be very important support. So in a very shorter term, on the back of merging of the two sciences, then my guess is that as long as 660 doesn't break, the stock has the potential to move higher till 730. So buy on Oro Pharma with a stop of 660, target 730 in this series.
Many thanks, Hemant, as well as Vishvesh, for joining us on the show and giving us all your strategies. But it's time for a BloombergQuint exclusive. 9 months after Religare Enterprises agreed to sell a majority stake in its health insurance business to private equity firm True North, both sides are at loggerheads and seeking regulatory intervention. Ridhima Saxena joins us in with all the details. Ridhima, what's the bone of contention between Religare and the other party now?
So like you said, Religare Enterprises Limited agreed to sell its health insurance arm to private equity firms led by True North in April. But now, as we understand from our sources, it has sent a letter to the Indian insurance regulator asking to hold the deal, stating the following reasons: that first, the Japanese drug maker Daiichi Sankyo, which has an ongoing legal battle with Religare Enterprises Limited as related to the purchase of Ranbaxy firm, has an objection to the deal. Second, that the promoters have their shareholding in the company have changed so far, and that is why there are problems with the deal. And the third, that one of the shareholders, International Finance Corporation, has not yet given consent to the deal. However, when we spoke to the executive chairman, S. Lakshmi Narayan, he said that this is mainly to seek higher valuations so that they could give higher returns to the employees who have bought SOPs and for the company. In the response, True North wrote back to IRDAI in the past week asking the regulator to not consider REL's plea as it is misleading and incorrect. They have also said that Religare Health Insurance may be in a problem going forward as their solvency is touching close to the minimum solvency requirement of 1.5. The deal for now has been put on hold by the insurance regulator.
Well, thanks for that, Ridhima. We'll keep giving you updates on that particular aspect. But with that, it's a wrap on this edition of the F&O Show. Stay tuned to BloombergQuint. We have lots more lined up, so keep watching.